Hello everyone, I am Pratap here. We are at part 1 of lesson 16, Zone Confluence. So in this lesson we will discuss about how to find the real order flow by doing zone confluence and also how we can manage the risk in much better way with the help of the zone confluence. And also with the help of the zone confluence, how we can identify when a zone can be violated. So these kind of scenarios we will discuss in this chapter. In case if this is your first video at our channel, please understand this lesson is having dependency on the earlier lessons. So we are providing free training on supply demand zone price action course. All the earlier training lessons can be accessible at our YouTube channel. So in our YouTube channel, click on the home page and scroll down to the playlist Supply Demand Zone Price Action Course. So click on this playlist. You will be able to access all the training videos. Scroll down to the bottom of the page and there starting from lesson 1.1 and until the most recent lesson you can access all these lessons are available in an order. So please go through all these lessons one by one. Do not skip any lesson. Then you will be able to understand supply demand zone concepts easily. I am also providing the link to this playlist in this YouTube video description and you can click the link and directly get into this page. Or you can also find the links to all these lessons at our Telegram channel. I am also providing the link to our Telegram channel in this YouTube video description. So please make use of this opportunity and strengthen your skills related to supply demand zone price action. Now let us get into the session. Zone confluence. So what is a zone confluence? If two demand zones or supply zones overlap with each other, what is this concept? When two demand zones or two supply zones overlap with each other. Generally you say it is a LOTL, level on the top of the level. But remember, based on this point, we have two concepts are developed. One concept is LOTL and another concept is zone confluence. Then what is the difference? When two zones are overlapped with each other, when we can say it is LOTL or when we can say it is a zone confluence. Definitely both are not same concepts. We already learned earlier in phase 1 training program. When two demand zones or two supply zones overlap with each other, it is a LOTL. But the condition is both zones should be on the same time frame. During phase 1 training program, we didn't learn about time frames. So whatever you learned during the phase 1 training program, everything applicable to the same time frame. Now during this phase 2 training program, we are focusing on the time frames. Now you got better clarity. So now you have to understand what is LOTL. LOTL is when two demand zones or supply zones overlap with each other, but the condition is both these zones should belong to the same time frame. What about when the two zones are related to two different time frames? Two demand zones are overlapped, but those two are related to two different time frames. Then that concept is called zone confluence. If the lower time frame zone overlap with the higher time frame zone, it is called as a zone confluence. Here lower time frame and higher time frames are not our HTF and LTF zones. Please remember, you already learned HTF, ITF, LTF. I am not talking about them. Here lower time frame and higher time frames are the general English words. Please understand. Maybe if you treat one time frame is a higher time frame, any time frame below is a lower time frame. That is general English word. Exactly one time frame below is ITF and two time frames below is LTF. That is what you learn. I'm not talking about that concept. I'm talking about the general English statements, higher time frame and lower time frame. Any one time frame you can consider as a higher time frame, and the zone below the below one time frame below is called as lower time frame. One time frame above is called higher time frame. One time frame below is called lower time frame. Maybe you can say the current time frame is a higher time frame. One time frame below is a lower time frame. Even two time frames below is also lower time frame. Even three time frame below is also lower time frame. Similarly, if the current time frame is a lower time frame, one time frame above is a higher time frame, even two time frames above is also higher time frame, even three time frames above is also higher time frame. This is the general English concept, not the technical word HTF, ITF or LTF. Hope I have given enough clarity. So in this chapter, when I say lower time frame or higher time frame, they are the general English words. Please remember. So what is a zone confluence? From the current time frame, one time frame below, you have a zone. That zone and your current time frame zone both overlapped with each other. It is a zone confluence. You may ask a question, should it be always one time frame below? It need not be. Even two time frames below or even three time frames below. That's why we are using the word lower time frame. Any lower time frame with the current time frame. Assume current time frame is the higher time frame. If both are overlapped, it is a zone confluence. It need not be always one time frame below. But what we do, we always follow a proper order. You go one time frame below. From there, again go one time frame below. Those kind of concepts we will discuss. But time being, you have to understand when two zones are overlapped, but both these zones are related to two different time frames, then it is zone confluence. But remember, both the zones should be either belongs to the demand zone or belongs to the supply zone. You cannot mix. One zone is demand zone and another zone is supply zone. That is not zone confluence. Both the zones should be of same type, either demand zone or supply zone. And also, both the demand zones or both the supply zones, they should belong to two different time frames. Order can be anything. Then that concept is called zone confluence. I hope you got the clarity. Let me explain with an example. You get better clarity. And how to find the zone confluence? I'm giving you some simple steps. First, find a zone in a time frame, in the current time frame, and assume it is a higher time frame. And step 2, change one time frame below and assume it is lower time frame. It need not be one time frame below, it can be two time frames or three time frames also possible. But for easy understanding, I am giving you change one time frame below and assume it is a lower time frame. Current time frame is a higher time frame, one time frame below is a lower time frame. The general English words. Now inside the higher time frame zone, find the lower time frame zone. That means both the zones are overlapped. Now you may ask a question. Should the lower time frame should be exactly inside? Need not be. It can be overlapped with the proximal line or it can be overlapped with the distal line. Either it can be exactly inside or it can be overlapped with the proximal line or it can be overlapped with the distal line. Anything can happen. If overlap is there or exactly it is there inside, in either cases, it is a zone confluence. But remember, it should not be outside. Even if it is very close but outside, then we cannot call it as a zone confluence. But in LOTL scenario, both the zones should be very close. Then also we can say LOTL within the same time frame. But here, two time frame zones, they are very close to each other. Proximal line of the higher time frame and the distal line of the lower time frame zones are very close but not overlapped. You cannot call it as a zone confluence. You cannot call. They must overlap or inside the zone. If any one of these conditions are not met, we cannot call it as a zone confluence. I hope I made it clear. Okay, if you repeat these steps to different time frames, repeating these steps till the lowest time frame, that is called fine tuning the zone. We can call it as a fine tuning the zone. It is a very important concept. Let us focusing on this fine tuning the zone in detail in the second part of this lesson. That is the practical lesson. With examples, if I explain, you get better clarity. But remember this point. This is a very, very important. Repeating these steps. What is repeating these steps? Let me tell you, you have your current time frame. Let us assume it is the higher time frame is daily. From daily you went inside 1 hour chart. Again from 1 hour chart inside you went to 15 minutes chart. From 15 minutes chart again you went inside 5 minutes chart. That way you are repeating the steps. If you do that till the lowest, because we are considering 5 minutes is the lowest, even some people also do up to 1 minute also, but anything you do repeating these steps up to 5 minutes is good enough. But experienced people, even they might do up to 1 minute also. So if you do this kind of zone confluence, finding the zone confluence by repeating these steps until the lowest time frame level, then this entire process is called fine tuning the zone. Why it is very important, you will understand later. Because based on this fine tuning the zone, we can build a powerful trading strategy that you will see in the practical session. That's why practical session is also very, very important session. Now I hope you understand what exactly the zone confluence. We'll see an example here with a chart, sample chart. We have a demand zone here in this example. Same thing you can apply to even supply zone also, but I'm giving just one example that is good enough for you to understand the scenario for both demand and supply zones. Okay, here whatever the zone you are seeing, assume that is the higher time frame zone. Now if you want to do zone confluence, what you have to do? From this current time frame, you have to go at least one time frame below. Let us assume we are going one time frame below. Okay, after going one time frame below, what you have to do? We have to find a zone inside this higher time frame demand zone. So inside this higher time frame demand zone, what you have to do? You need to find a lower time frame demand zone. So I am zooming this area. Within this zoomed area at lower time frame, that means one time frame below, assume we have a structure, price structure like this. We have candles like this. That means inside the higher time frame demand zone, we are finding again a lower time frame demand zone. See here, we identified a lower time frame demand zone. This is lower time frame demand zone. Look here, look inside the higher time frame. Whatever you are finding this lower time frame demand zone, That is one time frame below. That is what I'm showing you in the zoomed area. Whatever the zoomed area, let us assume one time frame below. Now you see, your lower time frame is overlapped. Lower time frame demand zone is overlapped with the higher time frame demand zone. This is called zone confluence. Now immediately you can ask a question. What is the advantage by doing this? Is there any importance for this concept? Yes, the importance is very, very high. That's why chapter 16 is a very important chapter. So, if you understand the advantages of this concept, then you will understand the importance. So, let us look into the advantages of zone confluence. The first one is zone confluence helps in finding the real order flow in a zone. See, entire zone, whatever the zone you have, higher time frame zone, entire zone you may not be having institutional pending orders. Let me say the institutional pending orders is the real order flow. You may not be having entire zone. Inside the higher time frame, maybe one area or more areas also. It is also possible. But first let us focus on. In one area, you have the real order flow. That real order flow, you can identify a zone inside the higher time frame. Then only you can able to identify. That is what we did in this example. So whatever the lower time frame demand zone you have drawn, that is the real order flow in the higher time frame demand zone. You may ask a question. That means there are no pending orders above this lower time frame demand zone within this higher time frame demand zone. There might be there, but they are very weak. They are not good. They may not be good enough to stop the supply. When the supply entered into this demand, when the supply is trying to consume the pending orders in the demand zone, they might easily consume all those pending orders. But where the real order flow is there, that is there in the lower time frame demand zone. And there the pending orders are having the real power to consume all the supply and push the prices up. That is what you have seen in the expanded area, in the circle. There actually it pushed the prices up. From there the real demand is started. So that's why we can say the lower time frame demand zone, whatever you are seeing, that is the real order flow. Maybe there you can plan your entry instead of planning at the proximal line of the higher time frame demand zone. That we will see again in the next advantage. But the first advantage you have to understand, because of this zone confluence, we are able to identify the real order flow in the higher time frame demand zone. The lower time frame demand zone is the real order flow inside the higher time frame demand zone. Okay, but you may ask a question. So always in the higher time frame we have only one real order flow we will be able to find, or even multiple order flows we can find. Sometimes you may find only one real order flow inside the higher time frame demand zone, or even some other times you may find multiple order flows, the real order flows inside the higher time frame demand zone. That is also possible. Look into the next example. If you look into this example, we have a higher time frame, and if you look into this lower time frame within this area, let us assume we are going one time frame below. Let us zoom that area. See here how the order flow is there in this example in the lower time frame. Now we identified one lower time frame demand zone. We also identified one more lower time frame demand zone also. See, now there is one more lower time frame demand zone. Within the higher time frame, we identified in this example two lower time frame demand zones. Look into this chart. This is the where the actual move is started. This is the next one, continuation to this. Now you may ask a question. Next time again prices are returning back to this demand zone. Both these demand zones will be working. They may work or they may not work. That is a different story. That is all depending on how powerful the supply is going to be next time when prices are entering into this. In case supply is very powerful, definitely the first demand zone, the one above, the first demand zone probably consume majority of the supply. Because the supply is very strong, this zone might be violated. And by the time prices reaches to the next demand zone, the supply is weakened and the pending orders in the next demand zone might push the prices up. You may see such kind of scenario. Or in some other scenario, the first demand zone itself could be very strong. It might be having so many pending orders. Even though the supply is very strong, still the pending orders might consume all the supply and then again push the prices up. That possibility is also there. But definitely one of these demand zones definitely might work or might give a successful trade for us. That possibility is there. Sometimes both these supplies also, sometimes both these demand zones also might be violated. That is also possible. They are all depending on the trend, price direction, and other concepts what you learned earlier. All those factors will be influencing the success of these zones. But there is a different story. But the point you have to understand, when you fine tune the zone, fine tune means you are going one time frame below or even multiple time frames below, and you are finding the actual horizons or the real order flows inside the higher time frame zones. When you are doing that, sometimes you may find only one order flow, that is what you have seen in the previous example, or you may find multiple order flows also, that is what you are seeing in the current example. Always remember the real order flows will be at the lower time frames. So this is one advantage of going for zone confluence. Any other advantages? We have one more advantage. Zone confluence helps in doing better risk management. It always helps in doing better risk management. How? Let me explain with an example. If you look into this example, we have a rally base rally. Assume you want to take an entry in this zone. So you want to go for a long entry. So where you take your entry? Maybe you can take it a type 1 proximal or type 2 proximal or type 3 proximal. Let us say we want to take an entry at type 1 proximal. Then this is going to be your risk. Then what is the reward? So this is going to be your reward. Suppose your risk is high. What you will do? You will go for type 1 proximal line. Still you can't manage the risk. You go for type 3 proximal line. The currently what you are seeing is the proximal 1, type 1 proximal 1. The highest body of this base candle is type 2 proximal. The lowest body of this base candles is type 3 proximal. This is what you learned during the phase 1 training program. Now we can do the risk management even in much better way with the help of the zone confluence. Zone confluence concept helps us in identifying the real order flow. So see here, this is our actual order flow. The lower time frame demand zone is having the real order flow. And here there are real institutional pending orders are there. This is the area. If that is the case, you wait, let the prices enter into this area. And now you can plan your trade inside this lower time frame demand zone. Rather than taking your entry at the higher time frame proximal type 1 or higher time frame proximal type 2, what you are trying to do? You are trying to take your entry at lower time frame demand zone, maybe type 1 proximal entry or type 2 proximal entry. This is the way you plan. And what is the advantage we get now? Now the risk is minimized. See, the risk is very small. Now the reward is improved a lot. And this is the best way of taking the trades. So with the help of the zone confluence, moving from higher time frame to lower time frame. And you will be planning your trades by taking the entry at lower time frame, either proximal one entry, type 1 entry or proximal type 2 entry. So due to that, the risk will be minimized at the least level and reward will be improved to the best level. So this is another major advantage of going for zone confluence. See here, next time, see the prices entered up to the lower time frame demand zone. There the real order flow is there. Now it pushed the prices up. And after that the prices went up. Again after that supply zone is having pushing the pending orders or pushing the prices. Okay, that is a different story. But see here how the lower time frame demand zone. And if you look into the higher time frame point of view, it is not the type 1 proximal entry, it is not the type 2 proximal entry, or even it is not the type 3 proximal entry. Even below, further below, we took our entry in this example. This is another major advantage of going for zone confluence. So, any more advantages? Yes, we have another advantage. Zone confluence helps in confirming the quality of the zone. How good the zone? If the zone is good, not good, what happens? The zone can be violated. That means with the help of the zone confluence concept, we also can identify the zone, some of the zones, whether if they can be violated. Well in advance we can identify. And that advantage you get only if you do a proper zone, proper analysis, that is fine tuning the zone. Earlier I told you. If you do a proper way of fine tuning the zone, if you do the analysis, what kind of analysis? Fine tuning the zone, repeating the zone confluence to lowest level time frame. Then we can assess the quality of the zone. At the lowest level, there is a proper order flow is there. Then we can say there are higher success rate. If the proper order flow is not there, definitely we can say we should not take a entry in that zone. There are higher chances of getting failure in that zone. Definitely, is it going to be failed? At least there are higher chances. We cannot give 100% guarantee to anything. What we can say is the higher chances. Let me show you an example, you will get clarity. Look into this. This is a higher time frame demand zone. Now you are going to the lower time frame. Within this area, in the higher time frame demand zone area, we are going to the lower time frame, and then within the higher time frame demand zone area we are analyzing. So let us zoom this area. See here what happened. How the zone is there in the lower time frame. See, we have 8 base candles are there. We have a drop, 8 base candles, and then a rally. When so many candles are there, you already learned in the phase 1 training program. If a zone is having three candles, three base candles, the quality of the zone is very good. Up to six candles, okay, quality is okay. Up to three candles, quality is excellent, extraordinary. Up to six candles, okay, quality is okay, good. It is a tradable. But above six candles, they are not tradable zone. Look here. We have 8 candles are there in this example. Next time, when prices enter into this zone, what happens? This lower time frame zone will be easily violated. And below this lower time frame zone, what is there? The distal line of the higher time frame zone is there. So higher time frame zone also will be violated. This is the way, well in advance, we can say this higher time frame demand zone will be violated. We can easily tell. How we are able to identify? Because you fine tuned in such a way, you identified the lower time frame zone, the quality is not good. But the real order flow will be there in the lower time frame. If the lower time frame, the quality is not good, the order flow is very weak. When the order flow is very weak, the zone will be easily violated. So this is the way you can identify when a zone can be violated. Well, before you placing your trade itself, you will be in a position to identify by fine tuning the zone till the lowest level demand zone. So that is the reason why zone confluence is a very, very important concept. We are in a position to tell this zone is going to be violated easily. Better don't take any trade in this zone. Maybe your trend might be supporting. Maybe your price direction is supporting. Maybe the location is also supporting. Even all these are all supporting, still we can tell this zone will be violated because the structure is not good. So this is another advantage of looking for zone confluence. Hope this information is useful to you. It is a very important concept and a powerful concept because it is helping us in identifying when a zone can be easily violated or not. And also risk management, that is the most important concept. It is providing the better risk management because we are finding the order flow, the actual order flow. Rather than taking trade in our time frame, we are going time frames below, one time frame below. From your entry time frame, you are going further one time frame below. If required, we are going one more time frame further inside. So that way what we are doing, we are minimizing the risk and maximizing the reward. Because we have such a important advantages, definitely you have to practice a lot in this concept. So that is the reason why in the practical session I will be giving detailed examples in our charts, how to find the zone confluence and how we can manage the risk by minimizing the risk and maximizing the reward. And also I'll show you examples that tells whether the zone can be easily violated or not. And also I will tell you the trading strategy, the powerful trading strategy with the help of fine tuning the zone, how we can take the trades. So all these things we discuss in the practical session. If you are having any doubts regarding this concept, please put them in the comment section. Please put your questions in the comment section. So I will try to address in the next video. Hope this information is useful to you. Let us all meet again in our next video. Thank you.